Gold picked up a lot of steam this week, closing out at $2,084.10. Let's take a look at the economic events that led up to this moment. Before we begin, remember to like this video and subscribe for more economic updates. Starting things off, there weren't any surprises in January's Personal Consumption Expenditures Price Index, a key inflation gauge released on Thursday by the Commerce Department. Headline inflation came in as expected, rising 0.3 of a point for the month and 2.4% year over year. The monthly number represents an acceleration over December's 0.1% rate, while the annual number declined by 0.2 of a point from December's 2.8% pace. Core PCE, which excludes volatile food and energy prices, performed in basically the same way. Monthly core PCE picked up speed in January, rising 0.4 of a point from December's 0.1 of a point increase, while annual core PCE dropped 0.1 of a point to 2.8%. Although annual inflation continues its slow but steady decline, analysts say the persistence in monthly numbers all but confirms the Fed likely won't start cutting rates before June. Among the many numbers released this week were several measures of the housing market, including government figures for new home sales, as well as the Case-Shiller Home Price Index. On Monday, the Census Bureau announced that sales of new single-family homes increased at a seasonally adjusted annual rate of 661,000 units in January. That's just 10,000 more than the downwardly revised 651,000 units sold in December. Analysts speculate the same cold snap that kept retail sales and factory production muted in January also kept potential home buyers off the streets. The following day, Tuesday, S&P CoreLogic revealed that its Case-Shiller Home Price Index increased at a year-over-year pace of 6.1% in December. Not only is that a sizable move up from November's 5.4% reading, it marks the 7th consecutive month the index has moved higher. Elsewhere this week, the Census Bureau reported on Tuesday that orders for durable goods in January fell more than anticipated, dropping 6.1% instead of the 4.7% decline forecast by economists. January's tumble was led by a near 60% decline in orders for civilian aircraft. Boeing currently is reeling from the fallout stemming from a cabin panel blowout of its Alaska Airlines jet during flight in January. The aircraft manufacturer said it received just 3 orders for new planes that month, an enormous drop-off from the 371 orders received in December. Excluding planes and automobiles, durable goods orders still fell in January, but by a much more modest 0.3 of a point. On Wednesday, the Commerce Department released its second of 3 estimates for GDP growth in the fourth quarter of 2023, saying the economy grew at an annualized pace of 3.2%. That's slightly slower than the advance estimate, which pegged GDP growth at 3.3%, but better than the expectations of economists, who had expected the second estimate to come in at 2.8%. Finally this week, the Conference Board surprised analysts by revealing that its February Consumer Confidence Index declined for the first time since November. The index landed at 106.7 last month, dropping from a downwardly revised 110.9 in January. Economists had expected the February measure to remain unchanged from the original reading for January, which was 114.8. Dana Peterson, chief economist at the Conference Board, said that among consumers, inflation worries have taken a backseat to anxiety over stability of the labor market as well as the nation's political environment. That's all for this week. Make sure to join us next week as we continue to give you the economic updates you need. This is Devlin Steele for Augusta Precious Metals signing out.